Hey guys, welcome back. My name's Aaron. This is Czar Finance, episode 39, Technical Analysis, Candlesticks. Okay, on today's episode, I'm going to break down for you guys the fundamentals of candlesticks and how to read them. Alright, take a look at this. On the left, you see a green bar. On the right, you see a red bar. Well, green is good for meaning an opening at a lower base and going up to a higher base, which is a good sign of growth and income. So growth meaning good. So green is represented by good. A bad one is, I wouldn't say necessarily bad, but a down market trend would be one that is red. It opened up at a high level and then closed at a low level. Let me show you some examples. Here we go. Here's the opening price for the green when we talk about a candlestick. When the stock market opens or when people buy and sell stocks, when people invest, it starts off at a certain price. Now, when people buy in volume of a price, it goes at, say, $5 there, and it'll go at the end of the day at 4 o'clock in the afternoon, it'll close at a higher price. So instead of being $5, let's say it'll be $6. So there was a growth between the opening price and then the closing price. Now, the opposite can be true for the red candlestick. When the opening price is here, say $6 for a specific stock, and at the end of the day at 4 o'clock it has closed down at say $5, there was a loss of profit, so it's a negative trend going downwards. And in between there you can see there's a lot of volume. Now, based on the size of the candlestick, whether it's a minute, an hour, a month, or yearly charts, you can see that the candlesticks represent what's happened in that exact specific time. Now, each tick represents a minute, an hour, a month, etc. So these are called candlesticks, or I should say each candlestick represents the month, minute, time frame that you're looking for before the next one takes place. So what you see here, there are sometimes these things that are on top and on bottom that looks like little sticks or whatever. So these are often called shadows, tails, or wicks of a candlestick. Now what that means is during the time of trading, if the stock price goes higher, it kind of caps out and then it kind of trailed back down lower. At the end of the day, maybe the low of the day, but then it ended up going like that. So you can take a look here. So when the stock price opened up here, it filled up, and it actually went really high, but then it kind of came back down because people were selling out and doing stuff that actually closed here. Same thing with the opening price. It maybe started here for opening price, went up higher, then it came down and reversed, and then went back down to here, then back up to here at the closing price. So these are called shadows, tails, and wicks. Many different names for them. Here's another thing we can talk about next. Dojis. A doji candle is basically the same thing. It's a smaller candle representation, usually very small and narrow, but usually with higher wicks on top and bottom. It's also called a reversal candle. There's many different styles when we talk about reversals, and I'll show you that in the next video. But here, take a couple look at these. This one is a club there, like a miniature putt golf. This one is called like a hammer, the close of the day. So what happened here, it opened here, went all the way down, and slingshotted all the way back up, and then closed lower. Okay, so you see that? So the same thing with this one. It opened here, went down, all the way up, and back down, all the way down to here, and it closed lower. And another one here is this one. Okay, they're all kind of the same. And then there's a smaller one. These are sometimes called a morning star or shooting star. It's just a smaller quick. There's not a lot of movement, not a lot of volume, not a lot of trading going on with the stock here. It just kind of floated. A couple people bought in, a couple people sold. It didn't really fluctuate too much. Now, where do you see these things in the stock market when looking at technical analysis? Well, here are some examples that you can see some of these charts that I found online using Google, and you can see here different ones. So this was a closed day. This opened up high and then it closed lower. This one opened up lower, closed higher. Then it got here, did up, and then turned around as a doji kind of a candle. You can see, and then it kind of started to trend downwards. Again, another doji right here. And usually a doji is referring to a trend reversal. So it kind of came down here. You can see here these candlesticks. And the stock price opened higher, closed lower, opened low, closed lower, opened here. One maybe shot up, then turned around and came right back down. And again, we have a doji candle right here, which is reversal, okay? And it's and then you can see the pattern kind of slingshotting back up. Hammer, right? Hammer time. Then kind of turning around, going back down, Okay, another doji, possible reversal here. Looks like it. Oh, another reversal. Then a big slam right here. A lot of volume. These longer candlesticks here represent a lot of buying and selling that are going on throughout that minute, day, hour, or monthly chart that you're looking at. Each one of these candlesticks here represents 1 minute, maybe in time, if you're looking at a minute chart. Maybe an hour chart. Maybe each one of these candles is an hour. Maybe each one of these is a weekly chart. I tend to follow the weekly chart and or the daily chart just to see what's going on throughout the day and the week. And then sometimes I'll look at the monthly chart just to get another clue. Again, this is a doji reversal pattern right here, and you can see it's going up. Okay, little star here, doji reversal, turning back down, and then you can sort of see the different patterns that are going on here. And understanding what these patterns represent over here is key to finding out what trends are happening and to predict the trends that's going to come in next. How do you know that this is going to reverse? How do you know when to get one of these here so that way you can get in on the buying floor here and profit all the way up and then say, uh-oh, here's a doji, probably not a lot of volume going on here, not a lot of people buying and selling, time to sell, so that way I can cash out all these winnings and then wait till it goes back down again, maybe goes back down, reversal, and then buy in back here and then catch back the wave back up. Or if you're doing short selling, which we'll get into later, where you can buy here and then sell short and then profit on the way down. That's how people can win and lose. I mean, not win and lose, but win and win, whether the stock is going down or up. You can profit at both ends. And if you get really good at it, you can profit on the way down and then rebuy and profit on the way up. So it's a double win for both people if you know what you're doing. So these are candlestick charts. I hope you enjoyed them. They're relatively simple to look at and easy to understand. The more you look at them, the better you'll get a feel for it. So I encourage you to go to tradingview.com, go online, look at stock charts, look at the thing, just watch them, see what happens. If you can predict what's going to happen next, awesome. The more you look at them, the better you'll get. So that's my advice for you. I hope you enjoyed this. My name's Aaron. This is Czar Finance, episode 39, Technical Analysis, Candlesticks. Bye-bye.